Welcome back. We've got some electrifying news about a seismic shift in the auto industry. A major player is stepping down from the EV game, while Tesla continues to rev up its performance. This news could send shockwaves through the market, so buckle up and let's get this show on the road. Let's take it from the top. Tesla opened the session at $267.48, just a shade above the previous close of $266.44. You could feel a bit of the positive sentiment carrying over from the previous session, couldn't you? A lot of traders were expecting this momentum to drive the price higher, but they had to brace themselves for a ride. As the day went on, Tesla managed to push as high as $269.08. At this point, it's interesting to note how the stock interacted with the surge signals for the day. The first surge signal on the upside was at $269.72, a mark Tesla couldn't quite reach. It was like a mountaineer aiming for the peak, but turning back just a few meters from the top due to harsh conditions. This shows a bit of resistance around the first surge level, which might have played a part in stopping Tesla from moving higher. After reaching the daily high, Tesla seemed to stumble a bit, dipping down to a daily low of $263.78. Again, the interaction with the surge signals tells a story here. The first downside surge signal was at $260.72, a level that Tesla managed to stay above. Just like a tightrope walker not falling despite the gusts of wind, this shows the stock found some support above the first downside surge level. In the end, Tesla managed to claw back some of its losses, closing the day at $267.43. While this is a marginal decrease from the open, it's still a 0.37% gain from the previous close. Kind of like taking a scenic detour, but still reaching your destination, don't you think? Taking a look at the volumes, we notice that Tesla traded 84,169,667 shares during the session. This is lower than the average daily volume of 134,978,029 shares. It's as if the crowd was a little smaller than usual at the concert, indicating that some traders might have stayed on the sidelines. The trading range for the session was 1.98%, pointing to a relatively tight back and forth. Even though the price wandered within this range, it didn't drift too far from the starting point. It's like the stock went for a walk in the park but never strayed too far from the path. In summary, while Tesla didn't quite surge past the resistance or fall to the first support level, it managed to keep traders engaged with a small gain on the day and a relatively tight trading range. It was a tug-of-war of sorts between the bulls and bears, and it'll be interesting to see who ends up taking control in the coming sessions. After all, isn't that the beauty of the markets? The story continues to unfold with each passing day. I want to go over this bit of news with you. An article titles Tesla Dominance Pushes Major Carmaker to Exit Electric Vehicles. This is quite an interesting piece on the dynamic shifts happening within the electric vehicle market, with Tesla being at the helm of these changes. There are several key elements in this article that we can dig into, and I believe they are all geared towards enhancing Tesla's position in the market and potentially propelling the stock price even higher. First and foremost, Tesla's sheer dominance in the EV market is noteworthy. The numbers don't lie. With 889,000 EVs delivered in the first half of the year and the Model Y becoming the world's best-selling car, Tesla is not only outpacing traditional automakers, but also new players in the electric car arena. This staggering performance creates an investor-friendly narrative that is likely to push Tesla's stock price higher. The upcoming release of the Cybertruck, slated for the end of the third quarter, adds to the positive momentum. With over 187,000 orders placed in just 5 days after its unveiling in 2019, it's reasonable to expect a significant revenue surge for Tesla upon the vehicle's delivery. This could translate into a substantial boost in Tesla's stock price, particularly if production can keep pace with demand. While Tesla continues to soar, we see other key players buckling under the pressure. Nissan, a pioneer in the EV space with its Leaf, is planning to discontinue this popular EV model. Likewise, Mazda is withdrawing its MX-30 EV from the US market, instead opting to focus on plug-in hybrids. Even General Motors had a hiccup with the discontinuation of the Chevy Bolt, though it's now set for a comeback. This retreat of automakers from the pure EV market could create an even larger vacuum for Tesla to fill, giving it a stronger hold over the market. As more carmakers choose to exit, Tesla stands as the indisputable leader, and this might build even greater investor confidence and push the stock price upward. Moreover, Tesla's unchallenged reign isn't just about its products, but also about the perception it creates in the market. The exit of competitors is a testament to Tesla's success and solidifies the company's reputation as a trendsetter. This is a narrative that appeals to investors, as it reflects a company that is not only leading but also shaping the future of its industry. With that said, the retreat of some competitors does not mean that the market is void of competition. Rivian, Ford, and GM are still in the game, with their all-electric pickups vying for a piece of the pie. However, Tesla's solid track record gives it an edge, and the anticipated launch of the Cybertruck could be another feather in its cap. In conclusion, the market's dynamics, combined with Tesla's strong performance and leadership, the anticipated Cybertruck release, and the exit of some competitors from the EV market, all create a promising environment for Tesla's stock value to climb higher. As always though, it's essential to keep a close eye on the market trends, company's performance, and external factors that could influence the stock price. Let's chat about these surge signals for Tesla's trading session on the 1st of August, 2023. Think of surge signals like markers on a hiking trail. They're key levels that can indicate whether you're moving in the right direction, up or down in this case. If the stock crosses these markers, it could confirm a further move in that same direction. On the upside, we have surge signals at $270.11, $273.43, and $279.45. If Tesla's stock starts creeping up towards the first signal at $270.11 and breaks through it, it's like our hiker has made it past the first challenging stretch. This could suggest more investors are buying into the stock and could potentially drive the price to the next level at $273.43. It's like making it to the next rest stop on the trail. If we see the stock price push past the second marker, it could be a sign of even stronger bullish momentum, maybe due to positive market sentiment or some good news about the company. However, reaching the $279.45 level, our highest surge signal on the upside, would be like the hiker conquering the toughest part of the hike. If the stock reaches this level, it could indicate that the buying pressure is quite strong and we might see the stock price continue to climb even higher. Now, let's switch gears and talk about the downside surge signals. We've got these levels marked at $264.09, $260.77, and $254.75. If the stock starts to fall and breaches the first signal at $264.09, it could suggest that sellers are gaining some control. Maybe the hiker is starting to feel a bit tired and decides to head back down the trail. If the stock price continues to drop and passes the $260.77 mark, that's our second rest stop on the way down. It could suggest the selling pressure is mounting, maybe due to less positive market sentiment or negative news about the company. But if the stock price drops all the way to the $254.75 level, it would be like our hiker has made it all the way back down to the trailhead. Breaching this level could suggest that the selling pressure is quite strong and we might see the stock price continue to fall further. Remember, while these surge signals are useful guides, they're not 100% foolproof. They're based on historical data and patterns, and as we all know, past performance doesn't necessarily predict future results. Other factors can also come into play, such as the overall market mood, news events, and shifts in the economy. So, while these surge signals can provide a helpful roadmap, it's always crucial to consider the bigger picture when making trading decisions. And that's a wrap, folks. As Tesla races ahead and others take a pit stop, the future of the EV market becomes even more intriguing. If you found this analysis enlightening, hit that like button and subscribe to stay plugged into the latest market trends. And here's our question of the day: how do you see Tesla's dominance impacting the future of the EV market? We're eager to hear your thoughts, so leave your comments down below. Thanks for watching, and keep charging ahead.